Hello everyone. Today we're going to have a very nice lesson. It's probably one of my favorite lessons is the false breakout. We're going to talk today what it's all about, why you can make money on it, and basically the most important thing, how it works. Because you have to understand the mechanics of the false breakout. I mean, if you open any book, just a regular book, doesn't matter, it's a Linda Vashke or Larry Williams or anyone else, you will just have a technical advice how it works, but you would never understand what it's all about and what's the inside of the false breakout. Today I'm going to try to explain for you how the false breakout works, what the big buyer or big seller is trying to do, and I'll show you some of the examples that I got it for you. Just for you to understand, first of all, the false breakout, it's obviously a situation where the stock cannot break. And the most important thing, a lot of times people don't even understand, and everybody's expected it's going to be a breakout, and a lot of times it's the breakout is not happening, and we're having a false breakout. So you should understand where is to enter and what to do. So today I'm going to, as usual, start with the paint. I'll explain for you how it works, and then I'll show you some examples. So usually in every scenario we have, you definitely need levels. The most important thing, you need levels from the daily chart or weekly chart or even monthly chart. The most important thing, it's on a previous lesson, I show you how the breakouts work. So the most important thing for the falls, it's when you have a concentration of, let's say, big buyer, instrument is trying to go up, but somebody is not letting him to go up. Most of the time, it's definitely going to be a false. So now I'll explain for you, and I'll give you an example of a few different false breakout, and I'll explain how they work. Okay, we have right here, we have a strong level, let's say, assuming we have a strong level from a daily chart. So what do we have? A lot of times, and most of the people, they don't know it's going to be a false or it's going to be just a breakout. So for you to understand what is the advantages for the false breakout, you should understand what needs to be done before a false breakout. First of all, if the instrument is going on a big paranormal bars, this is the big chance for the false breakout. If the instrument is going not only fast, but under a very large angle, it's definitely is for the false breakout. Very important thing, if that level is far away, what does it mean? It's a retest. If it's a far retest, it means the level was somewhere here. You have much bigger chances for the false breakout. Why? Because one simple thing, the instrument, when an instrument is going up a lot, the further levels would definitely hold the instrument. And for example, you're going to have a very slight chance for the breakout. Also, very important thing is the distance, how much the instrument is traveling. For example, if this is let's say from $30 a share to $50 a share, most likely is definitely going to be a false. That's what it is. So this is the situation which basically increases the chance for the false breakout. First of all, it's a big paranormal bars. It's a long and sharp moves, and the most important thing is the distance, how much the stock travel. And let's say in dollar, in percentages, and everything else. So you should understand one thing: when the instrument travel a lot and fast, it has a huge chance to be stopped by definitely resistant, in this case, levels. That's what it is. So I will give you a few different examples with a false breakout and how they work. The first one is a false breakout with the one bar, like this. So what it is, everybody's expecting the breakout. Somebody is basically trying to put the limit order there. Once the instrument is going lower, you can sell right here, right before the level. That's called simple false breakout. Breakout with one bar. Then you have a different story, false breakout with the two bars. This is just a little more attention to it. So I'll explain for you just a little more. First of all, why did it happen and how did it happen? If there is a big seller and he's trying to sell right here, that's what he's going to do. First of all, he's going to try to close the bar, daily bar, up. And he's going to tell you, guys, look at this. I'm a buyer. I'm buying it. Please help me out. And also here, the all stops are going to get triggered. The stops, which was short. So that's what it is. The short stops are triggered, and as well, long stops are triggered as well. So that's what it is. And then a lot of people trying to buy here because they see the stock is closing up. Then you have a different buyer who's showing to you, guys, look at this. Not only I close up, I also open it up. Please help me out. We're going to make money together. And then when the people try to buy, you understand, you have a two group of people here who's going to lose money as a long buyers. Long buyers who bought it with the stops. And then he puts the huge limit order and takes the stock slower. That's the techniques of the false breakout with the two different bars. That's what it is. It's a very strong situation, and I'm going to show it to you next on the picture. And then that's the picture. As you see, the most important thing, we're going to follow the rules. And the rule is, look at this. This is the FAR retest. Anything with more than 1 month between the levels, it's called FAR retest. And most of the time, if you have a FAR retest, the instrument cannot break it. It's not that easy to break from the FAR retest. Then, as I said, look at this. The stock travel fast and a long distance is also rule number 1. It's also going to show you that it's going to false breakout. But one simple thing is that a lot of limit orders are staying in the way. And it's not that easy just to break them orders. That's what it is. You see? It's a previous picture, but just in a, I'm sorry, not the previous picture. This is the S&P. Take a look. This bar just 0.75 points higher than the previous high. You see? That's what it is. So it's a FAR retest. You see, from September to October. It's been 1 month. See? And it's a very FAR retest. That's what it is. So you have to understand one thing. When you have something like this and a long move and a fast move, most likely, it's going to be definitely a false breakout. And as you see right here, the instrument only break very little, only 0.7 points higher, just a 1 point on S&P, which is nothing. It's shown to you there is a huge seller sitting there, and he would not allow the stock to go higher. Another example, you see, I'll try to make it bigger. Long falls. The instrument went down from 20 to $12 a share. You see, it's a retest. Small break, very small break. Take a look. See? And the instrument is going to higher. Obviously, you cannot expect the instrument is going to go higher like that and extremely fast. But in this case scenario, you know, the instrument went down fast and it's going to come back fast as well. This usually a FAR and a big falls are usually extremely fast. You see, in this case scenario, you definitely can see that you're going to get destroyed for one simple thing, because he rips everybody out. You see what he does? He takes a lot of stops, trigger the stops, take them higher, and bring them lower. What does it mean? It means all of these guys who was buying it here, they're going to be definitely a seller. So most of the time when you see a picture like this, the most important thing you should understand, the instrument is going to have plenty of energy for the falls, plenty of energy. Like I said before, you see long and fast drop from 54 to 44, $10 is about 20%. Same similar picture like that, falls and come back. So you should understand one thing, the instrument needs to breathe. And most of the time when the instrument dropping, it's definitely going to come back. So most important thing, you have to figure it out, the right daily levels. In this case scenario, this is the easiest part. You see why? Because you have a limit seller, you see? Most of the time when you have such a beautiful limit seller like this, in this case scenario, it's going to be much easier to make money. You see? Much easier to make money. That's what it is. So in this case scenario, when you see a scenario like this, it's very easy to make money. And we have last picture. It's a very nice picture. I'll show it to you. Look at this. It's first, it takes the level, and you have a very small, you see, falls. I'll explain for you why short falls are much better. Short falls, you know, for one simple thing. The big buyer or big seller will not let and would not give a chance for everybody else to get out. That's why when you see a small fakes, they're going to be much stronger than the big fakes. And I'll show you right now in a paint as well. And I'll explain. For example, if you see a level like this, you see something like this, and something like this position and this picture is going to be much stronger for one simple thing. Here, he is not going to give it a chance to big guys who basically was trying to buy it here and think it's going to go higher to make money on it. So what he's going to do here is definitely going to get out fast. So when you see something like this, you should understand that the small falls, short falls like this, are the strongest one. It was a very good and nice lesson for us today. Have a nice day and all the best.